A very good morning and warm welcome to the program. Thank you for tuning into Smart 24 TV and welcome back from Smart Means Business with Mr. Barije there giving you a fresh morning touch on the business in Kampala. Now this is financial markets and we do deal with the recent market performances of different stock exchanges. We give you a little bit of what's happening in the central bank as regards the central bank rate, the bond yields, and everything concerning financial markets, both locally and internationally here at Smart 24 TV. My name is Anthony Sebale, your host this morning, and follow me on Twitter for feedback on the show. You can also follow Smart 24 TV at Smart 24 TV and at Anthony Sebale. Well, the show is proudly brought to you by Otex East Africa. And with Otex East Africa, we are the number one brand when it comes to investing in the fixed incomes market. Zabu, an initiative by Otex East Africa, we are saying you can do something new. Simply dial *292# and follow the prompts to be able to, first of all, register for this particular trading. And secondly, you can learn more about the products. And thirdly, you can do the trading yourself. To do the trading, you must have at least 15,000 Ugandan shillings to start with, which is a deal breaker for Otex East Africa. With as little as 15,000 shillings, you get to invest in fixed income securities across East Africa, in Kenya, in Uganda, and in Tanzania. That is why at Otex East Africa, Zabu, we're saying you can do something new. Let's delve into the business of the stock exchange in Uganda, starting off with the Uganda Stock Exchange. On Tuesday, the markets opened on Tuesday after a very long holiday from Friday, where we didn't have actually Saturday, Sunday, and Monday, as of course Monday was our Independence Day. We were celebrating 61 years of being independent as a nation. And the markets opened on Tuesday, again, 10th of October. And by the end of the trading day, at least close to 1.2 million shares were recorded, corresponding to a market value of over 40.58 million Ugandan shillings. Now, the day signifies a decline slightly compared to Friday, the previous day, which we had as a trading day, with a 50% decline registered in the turnover and at least 54% decline in the volumes. The market capitalization also slightly reduced, but maintaining a 16 trillion mark at 16.1 trillion Ugandan shillings closing. Well, the market in Uganda have been improving, and over the past few months, efforts from the different entities, especially the Uganda Stock Exchange and the Capital Markets Authority of Uganda, have been able to push the markets to a bigger platform. And USE has put efforts in this, for example, through the Uganda Securities Exchange, EDALA. This is an initiative where they're encouraging young companies, they're encouraging smaller companies to be able to list. And this particular platform gives them a good identity, and they get the training, they get the necessary mentorship from the different other entities that are already listed, and they prepare them for listing. And this is a very wonderful initiative that USE has been able to undertake. And now in aggregate, on Tuesday rather, there were 4 equities that participated in trade, ending the day with 3 gainers and over 5 losers on the market. Stanbic Bank Uganda led the gainers with a gain of 3.23%. Yes, Stanbic is still rallying the markets here in Uganda. The bank has witnessed a growth not only in assets, but also a growth in the number of clients, a growth in the current deposits that they have as a bank. So even on the stock exchange, realistically speaking, when you look at the figures, because the figures communicate more than anything, the investors are impressed by the company's performance. Now, the share price appreciated to 32 Ugandan shillings at Stanbic Bank Uganda. Let's look back a little bit at Stanbic Bank's performance over the last series of months. Now, Stanbic Bank Uganda currently holds a stock of at least 1.64 trillion. That is a jump from over 900 billion just a couple of months back. And now we are counting 1.64 trillion Ugandan shillings. This represents about 10.2% of the entire market capitalization, equity markets here in the Uganda Securities Exchange. Now, to put things very clear, this is just a representation of the whole 1.6 trillion is just 10% of the entire market. But we're talking about a company which has a price of at least 32 shillings. This is, first of all, their highest pricing this year, but not only this year, but over the last series of years. When you look at, if we could just look back with the graphical representation of the pricing, Stanbic Bank in 2022 had the highest price at around 27, and then in 2021 they had at least around 28 as their maximum pricing. And way back in 2020 and 2019, their highest price was still around 28, 29, 27. So what we are witnessing here on Stanbic Bank is historical. It is one of their highest prices that they have ever traded at. If I'm not mistaken, it could be the highest price, at least after listing on the main board of the exchange. Well, Stanbic Bank listed way back in 2007 on the 25th of January, and since then they have been trading on the Uganda Stock Exchange. They entered the space with limited competition, very little competition compared to comparing with the banking institutions then, the number of entities that were trading on the exchange. Now we have quite a number of financial institutions that have joined the exchange, both foreign and local, including KBC, for example, DFCU Bank on the local platform. You're looking at, we are looking at maybe Centum Investments. We could put that all in the bracket of financial institutions, but Stanbic has showed an outstanding performance. Now, the price yesterday went up slightly from 32 Ugandan shillings to 33. From 31 Ugandan shillings to 32 Ugandan shillings, a 3.23% jump there. This was after trading over 1.1 million shares at 35 million Ugandan shillings. Now, the current shares outstanding are still at 51.2 billion shares, and 1.64 trillion is the market capitalization we are still talking about. Now, let's look at the longer term performance of the bank. Stanbic Bank, after closing at 32 Ugandan shillings on Tuesday, has now witnessed at least a gain of 3.2% daily, but in 1 week percent gains, it's also at 3.2%, and in also the last 4 weeks or the last 1 month, it has a 10.3% jump that has been witnessed on the stock, and in the last 1 quarter or 3 months, at least over 23% has been added on the stock. Now, in terms of year-to-date performance, when you look at the year-to-date performance, this is also another very critical performance indicator, or what we can call the KPI. For Stanbic Bank, we started the year at least a price of 21 Ugandan shillings. And right now at 32 Ugandan shillings, the bank has gained over 51%, actually 52% if you round off that figure, 52% gain on year-to-date, which interestingly is the best year-to-date performance we have on the Uganda Stock Exchange. Now, when you look at the shareholders' view of the markets, as far as Stanbic is concerned, there's a lot of optimism about Stanbic Bank's performance, as it has also accrued 10% over the last month performance, as we can see. Also, in terms of trading, or in terms of the volumes that have been traded, Stanbic has the second highest number of shares that have been sold and bought on the exchange in the past 3 months. Speaking from 6th of July to about 10th of October, Stanbic Bank Uganda has traded a total volume of at least 17.5 million shares and a value of about 491 million Ugandan shillings over the period, with an average of over 278,000 shares traded per trading session. That is Stanbic Bank Uganda for you. A lot of value coming in from the financial institutions here on the exchange, and a lot is of course expected, even more within the next couple of weeks and months. Stanbic was not alone amongst the top gainers. Equity Bank as well came in as a top gainer at 1.27% appreciation in price, and then Centum Investments also added about 0.33% on their stock price value, and that was it from the top gainers. And when you look at the other side of the coin, the bottom losers, from the bottom we had the Jubilee Holdings Limited stock, East African Breweries Limited coming in at the very, very bottom. And East African Breweries Limited lost about 5.82% on their pricing, closing off at 3,119 Ugandan shillings. The Stanbic Bank, rather KCB Bank, also had a loss of about 0.12%, and the Nation Media Group, NMG, lost about 0.12% on the market. Stanbic Bank Uganda, like I said earlier, had the biggest volume shared at 1.1 million shares approximately trading just for Monday. And this was followed by strictly Bank of Baroda. Yes, Bank of Baroda also had 77,000 Ugandan shillings. However, their stock price is still stuck at 15 shares, 15 Ugandan shillings per share. Bank of Baroda, remember this year, in June, on the 7th of June, to be very precise, issued bonus shares for their current shareholders at a subsidized price, and this drove the price downwards from 85 Ugandan shillings to an average of now 15 Ugandan shillings. This was following a directive by Bank of Uganda to have all financial institutions on Tier 1, that is commercial banks, to have all those financial institutions have a minimum capital requirement raised from 25 billion to close to about, actually to 150 billion by 2024. And Bank of Baroda was one of those banks that wasn't meeting these requirements, and they, in a bid to get more capital, they issued bonus shares. This is always an option available for you if you are an entity that is listed, and these are some of the benefits of listing your company on the exchange. In case you need more capital, and sometimes it's not just about you, but the regulator, in this case Bank of Uganda, could come up with any of these resolutions at any point in time. Is your business ready to raise this money? And if it's not, are you listed at least to have a plan B where you can go to your shareholders and say, hey, I need these extra, I need these extra monies, and I need this much shares, if at all. You can buy them, I can get my capital, and then we could all share the value. That is exactly how the stock market comes to your help. And this is what Bank of Baroda Uganda actually went through in the month of June. Just to conclude with the Ugandan markets, regarding the performance of the market indices, the USE market index shed off at least 3.54 points on Tuesday, and this was to close at 925.20 points, representing a 1 week loss of about 0.34% and a 4 week loss of about 3.23%, and yet an overall year-to-date loss of about 23.7% was also registered on the market. Now, the USE All Share Index is what tracks the aggregate performance of all the 18 stocks. However, we do have another index, which is the Local Company Index, and the LCI, or the Local Company Index, tracks the aggregate performance of the domestic listings. And on the other hand, this increased on account of stocks like Stanbic Bank Uganda by a tune of about 0.68% on Tuesday, and that's east to 280.9 or 0.29 points on the markets on Tuesday, making it a 1 week gain of 0.64% and a 4 week gain of 2%. Generally, that means that the markets are improving especially based on the domestic listings or the local market. That is exactly what the local company index is communicating. With the local company index improving, we are seeing stocks especially such as Bank of Baroda, MTN Uganda, Stanbic Bank. Uganda Craze, by the way, was one of the performers on Tuesday. They are pushing, and Umeme as well has been on the front line in as far as the market's performances are concerned. We will take a quick break, but before we do that, we're going to come back. When we come back, we look at monthly performances of August and July and compare, of course, with September, which is about to be unleashed by the Uganda Securities Exchange. Who are some of the top movers on the market? Who are some of the big gainers and the big losers on the market? We're also going to be analyzing and breaking down some of the things that you need to note about the collective investment schemes. We have collective investment schemes, unit trusts that have become so popular recently. We are going to be looking at the second quarter analysis of this year 2023, comparing that to what is yet to come out as the third quarter earnings and a report from the Capital Markets Authority. As we shall be doing that, hopefully you will be able to take some notes home and also make your own research further, because what gives you the moral authority to trade, what gives you comfort as you are buying and selling shares is knowledge. And knowledge is very vital and indispensable when it comes to trading in financial markets. My name is Anthony. We're taking a very short breather. Stay with us. We'll be right back.
Smart 24, driving business.
Cooking oil like no other makes a meal so sweet and scrumptious. The taste of Uganda. Yeah, the taste of Uganda. The taste of Uganda.
Say goodbye to paperwork and travel costs. Now every MTN customer can register to invest in securities anytime and anywhere with Zabu in a few simple steps. Step 1. Dial *292 hash. Step 2. Select option 1. Register with Zabu. Step 3. Enter your full names. Step 4. Enter your national identification number. Step 5. Enter your national identification card number. In 24 hours, you will receive an SMS confirming your registration. Congratulations, you are now ready to invest.
My name is Aisha Naimi. I'm the director of the Solar Innovation Center. The Innovation Center is a clean technology innovation hub that promotes sustainable energy future in Dubai and beyond. And it's located at the heart of Mohammed bin Rashid Al Maktoum Solar Park, which is considered among the largest single-site solar park worldwide based on the IPP model. The Innovation Center is focusing on 3 key pillars: innovation, education, and inspiration. The education by empowering youth and building their capabilities in the field of clean and renewable energy. We are hosting professional training, providing workshops and trainings to empower the next generation of innovators in the field of renewable and clean energy. The inspiration by inspiring people and raising their awareness about sustainability and the green initiatives of DIWA that support Dubai transition toward the clean energy. So it's open to public to come and visit the Innovation Center and see the actual initiatives and the projects in real life. And we are focusing as well on the innovation by showcasing the latest technologies that are being adapted to the project of the solar park and DIWA in general, the renewable and green initiatives of DIWA.
Smart 24, driving business.
Warm welcome back to the program, and thank you for tuning into Smart 24 TV once again. My name is Anthony, and this is Financial Markets. On the show, we give you updates on the different markets that are around the world, and we give you the latest info that is unfolding in as far as the markets are concerned. And today, we've given you already an outlook on the Uganda Securities Exchange, and we're going into the Nairobi markets. But before we go into that, I want to remind you that Altex East Africa is your #1 trading platform when it comes to fixed income markets here in East Africa. Altex East Africa gives you the markets as an offer because they give you 15,000 Ugandan shillings to start with. That is exactly what you start with. 15,000 Ugandan shillings is all you need, and accessibility to the market has been now eased to your account using your phone. You can be able to transact using your mobile money account. You can be able to transfer funds off your mobile money. You can receive money on your mobile phone. All your yields, all your gains can be received on your mobile phone. All you need to do is simply to dial *292# and follow the prompts, and then you start your journey of investment with Altex Trading. Altex East Africa is licensed to trade by the Capital Markets Authority of Uganda, and they have been in this game since 2018. The markets open at exactly 15 minutes past 8 a.m. and close at 15 minutes past 3 p.m. That is East African Standard Time. And with Altex East Africa, we are saying you can do something new. Well, let's have a look at Nairobi markets very briefly as we continue to maneuver the East African markets here on the show. Now, the Kenyan markets have been under a lot of storm after a couple of changes within the system. When you look at the Kenyan shilling against the US dollar, there has been a lot of struggle for the Kenyan shillings. However, that hasn't stopped the markets from moving, and the markets are still one of the fastest moving and fastest growing within East Africa. At the end of the first weekday of trading on Monday, at least over 6.4 million shares were traded at 903 deals, and with a corresponding value of about 162 million Kenyan shillings. Compared with the previous NSE trading day, that was Friday, the markets at least declined 88% by volume and 78% by turnover. The market capitalization, however, is at 1.47 trillion Kenyan shillings at the moment. Now, in aggregate, out of the 66 equities on the market, over 46 listings participated in the trade, with the day ending with 15 gainers and 21 losers on the market. TPS East African Serena led the gainers with a 9.48% appreciation in price, closing at 12.70 Kenyan shillings per share. This was after they added at least over about 6 shillings to their price and closed at 12.70 Kenyan shillings per share. The ever-ready East Africa company also added at least 7.03% on their market value there, and Trans-Century East Africa added 5.88%, whereas East African Breweries Limited at least added about 5 0.04. Now, Sanlam Kenya came out at the bottom after a loss of about 9.09%, and this was ending the day with 7.0 Kenyan shillings per share. Equity Group Holdings recorded the highest volume of at least 3.43 million traded shares and was followed slightly by Absa Bank of Kenya, which came out at a 1.37 million shares volume. Safaricom now came in the third place at 809,000 shares that was traded. Well, Safaricom has quite a number of ventures right now, and a lot of prospects have been expected from the company, especially ever since opening out their new network in Ethiopia, which has been one of their biggest investments even within the Horn of Africa. Now, Safaricom has, however, gone down slightly in market performance on the NSE. And when you look at the current price, it's at a 13.9 Kenyan shillings per share pricing. This is down from averages of about 16 Kenyan shillings or so in the months of August and September, which is quite sloppy for the investors. But it's currently still the number one most traded on stock in the markets here on the Nairobi Securities Exchange over the last 3 months, with a total volume traded of about 521 million shares in the trades they carried out within this period. When you look at the Safaricom stock, first of all, the investors have this feel right now of having very few foreign investors. The markets in Kenya formerly had so many foreign investors, and they still do right now, but the numbers have gone down slightly, and more local investors are getting into investment. This is exactly what the East African capital markets are supposed to be headed for. Local investment. Local investors drive the market according to not just how the global finances outlook is, but according to what they feel is happening on ground. So if Safaricom, for example, is giving good daily data bundles, maybe it's giving a lot of a high-speed internet, it's giving out prizes here and there, people will feel like the company is doing something in the community, and they will respond depending on the current conditions, in the prevailing economic conditions within the country, whether or not to continue investing in the company. That is exactly why local investment is so important. On the other hand, when you look at foreign investors, they have a different view of things. You look at a company being invested in by Chinese, Americans, when the dollar gets hit, or when something happens in maybe the US markets, maybe the treasury yields are going up, maybe the stocks there are doing so well, they will pull out. They will pull out of this investment because they have options. They are global investors. They don't know exactly what it means to Kenya, what investing in the company means. They will pull out, and this will drag the markets down. This is what we've seen formerly on stocks like these, like Safaricom, because 50%, almost 50% of market activity in Kenya is on Safaricom alone. Almost 50%. And we're talking about a stock that occupies over 38.2% of the entire market, equity market in Kenya. So it has a lot of impact whatsoever on the Kenyan stock exchange, but also on the Kenyan economy, because what happens to Safaricom happens to the entire economy, because they are contributors, first of all, to the economy. They employ people. They have a lot of ground staff who are doing work based on how the company is performing. And so everything that happens to the company does impact the entire ecosystem around the company and the country as a whole. This is why local investment is so vital for our markets in East Africa if we are to keep going as an economy, as a regional economy. Otherwise, if we keep depending on foreign investors, we shall keep always depending on what their sentiments feel are. You know, we will not have the independence to make decisions based on how things are or the status quo of our own economies. So that's exactly what we are seeing here in Kenya, and we hope definitely things get better with time. But Safaricom, as per Monday trades, they closed at 13.90 Kenyan shillings rather on the Nairobi Securities Exchange. Now let's have a look at the local company index, rather the indices here on the Nairobi Securities Exchange. The all-share index inched up or raised at least by 0.11 points up to at least 93.60 points, indicating 1 week losses of about 2.03% and a 4 week loss of about 5.83%. An overall year-to-date loss of 26.57% was also indicated on Nairobi Securities Exchange. The other remarkable indices now included the NSE 10 index, which is the top 10 stocks tracker. It tracks the aggregate performance of the top 10 stocks on the Nairobi Securities Exchange, and this one improved by 0.49%, whereas the NSE 20 improved by 0.35%, and the NSE 25 improved by 0.19%. That is generally speaking about the markets in Kenya. There's been a lot of improvement in as far as market share, market distribution. When you look at the investors, there are so many investors right now who are interested in the market locally, but also the foreign investors have strengthened their grip on the market with a lot of interest on stocks like Safaricom, Absa Bank, and a couple of other stocks on the Nairobi Securities Exchange. That's the trading, my friend, from the Nairobi Securities Exchange. You can also be able to buy shares across Kenya if you want to, because diversification is very key. Portfolio diversification is very key to the success of an investor. You can buy or sell shares across the world as much as you want to, but not limiting yourself to a particular market. That could be fatal to your investments. Well, let's have a look at elsewhere in Africa and see what's happening across board. Let's go to West Africa and have a look at Nigeria Stock Exchange, for example. Now, the Nigeria Stock Exchange is a leading integrated market infrastructure in Africa, serving the continent's largest economy. And this is speaking about the largest, not the most highly performing economy, but the largest economy within the African continent. The all-share index on Monday actually declined by 116 points, looking at the average and overall performance of the Nigeria Stock Exchange. At the end of the day's trading session, a total of close to about 257,000 shares in 6,498 deals was recorded, and this was corresponding to a market value of 7.7 billion naira on Monday. Compared to the previous day, there was a 4% decline in the volume and a 125% improvement in the turnover on the markets in Nigeria. The current market capitalization is at least 36.8 trillion Nigerian nairas on the exchange. Over 119 equities on the Nigerian Stock Exchange listed that these participated in the trade, and about 13 gainers and 27 losers were recorded. Capital Hotel recorded a gain of 9.82%, whereas the Chams Hotel at least added 9.37%. This is just to show you how the hotel and management or hospitality industry is doing in Nigeria. Most of the top stocks in Nigeria are in the sector or the industry of the hospitality. For example, look at Capital Hotel, look at Chams, then look at Associated Bus Company, a bus company doing quite well on the Nigerian Stock Exchange. This gives you a picture of how different the markets are in West Africa slightly from the East African markets here. In East Africa, we have so much better performance on especially financial institutions. And we don't have actually so many listings in the hospitality industry. But that also explains to us how our tourism industry is doing generally. The stock market gives you a picture of exactly what is happening within the economy. If people are investing more in the hospitality industry, there is a communication that they could be doing well. And if we're having more of the financial institutions, maybe people are dependent so much on financial institutions in as far as credit and so on and so forth. So that's what we're having in the Nigerian market. You're seeing Capital Hotel, McCollins, and a couple of other institutions there in the hospitality industry doing so well on the stock exchange. And on the East African market, it's the other way around. But that's just to give you a picture that the stock market actually does indicate and does give you a little bit of information of what's happening within the economy, where the gist is when you look at the economic outlook. Now, just looking at the bottom losers on Nigeria Stock Exchange, John Holt came out last with an end-of-day depreciation of about 10% at exactly 1.4 Nigerian naira per share, followed by Presco at a 9.54% decline, and followed by Dar Communications at about 8.7% depreciation in price. Deep Capital Management and Trust at least also dropped by about 7.41%. Fidelity Bank recorded the highest volume at 53.4 million shares, and followed by Access Holdings at about 31.1 million shares. United Bank for Africa, or UBA, at least also had about 26.8 million shares, and Owando had about 13.6 million shares that were traded on the market here in Nigeria. Regarding the performance of the Nigeria Stock Exchange indices, the benchmark index, that is the all-share index, NGX, had about 116 jump points to about 66,984 points, maximum closing of the day on Tuesday, and a one-week gain of about 0.32% and a four-week loss of about 1.7%, but an overall year-to-date gain of about 30.7%. That is from the Nigerian Stock Exchange market indices performance. And this gives you a picture of what is happening in the West African market. But to give us a much more comprehensive picture, let's have a look at some of the performances from the rest of West Africa. And here we are looking at Ghana Stock Exchange. You're looking at also some of the markets in Niger. They give you a positive outlook compared to Nigeria, but they are giving us smaller movements. When you look at the movements on the Ghana Stock Exchange, they're quite small, and on just a few stocks like MTN and a couple of other companies like Palm Oil Plantation that have slightly improved their trade, but not significant enough for the regional market. And that's it from the West African markets there. Now, let's get to cross over to the other side of the world in the West, where stocks have been improving given the performance of the benchmark indices such as the S&P 500 and the Dow Jones. However, the bonds may be out of the woods as we speak right now, and that could make trouble for the stock performance on the United States markets. Now, Treasury yields fell on Tuesday, easing off 16-year highs that had spooked the markets over the past 1 week. But when you look at Sophie, head of investment strategy, Li Xiang, he told some reporters at Yahoo Finance that the market's latest pain trade might not be over. And she said she doesn't think that bonds are completely out of the woods yet. According to her, she also hasn't seen very much weak economic data in the United States. And at this point, there hasn't been a good reason for yields to come down and stay down. She highlights that yields are moving down ahead of the latest read on inflation expected on Thursday. This will be happening tomorrow. And last month's consumer price index, according to at least economic data for September, it shows that the prices grew by 3.7% in August compared to last year, and an increase driven largely by the rising energy prices. While economic surveyed by Bloomberg also saw inflation ticking down to 3.6% in September. Young says it's not super optimistic yet, based on the energy prices that were higher for the month of August. Yes, the month of August saw a very high energy price increase, like about 3.6% of the prices were rising because of oil prices that were going up at the moment. Higher inflation in the United States could still prompt the Federal Reserve Bank to hike interest rates even once more. Recent research from BlackRock shows that the 10-year Treasury yields has closely tracked the Federal Reserve funds rate during this and other hiking cycles. That shows that the rate at which Federal Reserve Bank is hiking their rate is the same rate at which the central bank, rather the yields on the Treasury bonds have also been going up. Stock price movements have been highly correlated also to the bonds markets. There's been a lot of correlation between the bonds markets and the stock market prices recently. So what inflation report that sends higher yields would potentially not bode well for the equities, which have not reacted well to the instability in the bond market. If the market narrative near term is especially in the direction of interest rates, which we have seen more often than not in the Federal Reserve's rate hiking movement, then the answer is only reversed if interest rates stabilize. That's what we are looking at here from the United States angle view. But more news is still coming in from the United States. It shows that Birkenstock, which is a maker of slippers, or what we call sandals here, it's offering an initial public offer with a price value of about $3, and they want to raise over 8.64 billion US dollars in this initial public offer. The price has been set for the value of about 249-year-old German maker of upmarket sandals at least 8.64 billion US dollars that the company is looking to collect. The company said on Tuesday that it has priced its IPO at 46 US dollars per share, and this is in the middle of its expected price range of about 44 to 49 per share, 44 to 49 US dollars per share. It is due to start trading on Wednesday on the New York Stock Exchange under the ticker symbol BARK, or BIRK. Birkenstock Holding Limited sold out over 10.8 million shares in offering, raising about 495 million US dollars. Its shareholders sold an additional 21.5 million shares later on. The company's footwear was first cobbled together by Johann Adam Birkenstock in Germany in 1917, and the sandals have been long derided, and under the US market there's been a lot of sales, especially across the world as well, in China, in Asia and other parts of Asia. So the stock is doing quite well, and we hope they have a successful IPO that will be ending this Wednesday with an offering at 46 US dollars per share. And that's it, ladies and gentlemen. Thank you so much for once again tuning into Smart 24 TV, where we drive your business. We'll be back. Thank you so much for, of course, getting to our different social media handles and giving us feedback. We do appreciate that. Smart 24 TV means business, and we drive this business 24 hours, 7 days a week. This is Financial Markets, and my name is Anthony. Catch you later. Bye for now.
Smart 24, driving business.
Farming practices are evolving in incorporating new technologies to address the challenges of agriculture in arid regions like United Arab Emirates, UAE. UAE's commitment to modern farming techniques is essential for ensuring food security and sustainability. The UAE has embraced modern farming practices, which likely includes hydroponics, aeroponics, and other advanced technologies to grow crops efficiently in desert environments. The adaptation of modern farming in desert areas is crucial for countries like UAE, where traditional agriculture may not be feasible due to limited water resources and harsh environmental conditions. Mentioning the world's largest vertical soliless facility in Bostania showcases the innovative approach to agriculture. It allows for maximization